You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time, once again, for Vol Views, the program, the premier program, some might say, for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever vol insightful, at least we hope so, Options Insider Radio Network. You want to get that full insight? Well, you're on the right show. You're listening to the right show. If you want the whole kit and caboodle, if you want to experience all of the goodness that is our network, the easiest way to do that is just to wherever you're listening to this. Could be our website, could be iTunes, wherever you get it. Just upgrade to the full experience. Grab the full network app. I know a lot of you listening there already. So, hey, we thank you. We love you guys. And if you're not doing so, head on over there wherever you listen and do just that. That'll get you 15 shows. So daily news, advisor show, option block a couple times a week, volatility views, TWIFO, all that good stuff. All coming at you pretty much the moment it is produced and cut together. And of course, for you super hardcores out there, we give you a little added bonus. We do the show live. We broadcast it live every Friday, noon Central, 1 p.m. Eastern via Mixlr. So if you're around middle of the days on Friday, you follow us on social media, you go to the site of those places, just grab that link that we always tweet out there. Save it, set it, and forget it. And you can use that not just for this show, but for TWIFO coming up in about an hour and a half, for option block throughout the week, some of the other live stuff we do. Grab that one link. You can even follow us in Mixlr if you are so inclined. Get notified the second we go live. And then you too can participate in the live fun that is the live stream. You don't have to wait until the next business day to hear the show. So that's always a fun little bonus for you. And however you listen, it could be live, could be after the fact, could be on Stitcher, could be wherever you get it. Of course, also via our mobile app, which is available on a bunch of different platforms. However you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We love them all. We do actually, believe it or not, we do actually like to hear from you guys, most of you. 98% of you, I would say. All right. And joining me on the old program today, let's start off. Let's just throw a dart at the board and see who we get. Let's start off with the man, sometimes in the corner office. These days he's on sabbatical, so I guess maybe he's in the corner bedroom. I don't know. Someday down the road, many, many years hence, he shall perhaps be known as Dr. VIX. Until that day, let's call him Mr. Russell Rhodes, the senior man about town over there at the CBOE Options Institute. Mr. Rhodes, welcome back to Volatility Views.
Oh, thrilled to be here. Something's going on by the horse. There's yelling and screaming in the courtyard.
How would you know? You're at home.
No, I'm in my office.
Oh, you're back? You're back from sabbatical?
Office. Yeah.
Also, I misspoke in your intro.
Something's going on down there. A bunch of people are screaming and yelling. We're being protested for something. People probably are upset because the S&P is doing nothing and VIX is up. Therefore, they'd be protesting.
Yes. They're really angry about that, Russell.
Yeah.
Lots of people take to the streets when the correlations break down between the major indices. Well, it's not May Day, it's not Labor Day. I don't know why someone would be out there. Maybe they're just protesting the fact that you were on sabbatical for so long. They're happy to have you back, and that other voice you heard, listeners, that very tinny voice, could belong to none other than the greasy meatball himself, Mr. Mark Sebastian from Carmen Line, by way of OptionPit.com. Mr. Meatball, welcome back to you, I should say. And who is protesting you today?
The world is protesting me. I'm getting it from all sides. But I'm personally leading the protest against VIX. 2 days in a row, messed up correlation. I'm not happy about what I'm seeing in that index. It better shape up or ship out.
There we go. The world is protesting Mark Sebastian. I like that. I think that's a good point to kick the show off on. If you too want to protest him, head downtown or head on out to scenic Riverside with your picket signs. Meanwhile, we're going to keep on rolling with the show. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the show where we review the volatility from the week that was and indeed still is. Volatility trades, trends, activity, all sorts of weird stuff. Whatever's popping up on the vol radar, we'll get to it here on the show. And it's been a weird week, and it's kind of wrapping up, as Mark and Russell alluded to, and kind of weirdly as well. If you've been following the news, and it's kind of hard to miss these days, a lot of strange stuff popping off this week. Of course, we kind of roared out of the gate earlier this week. The beginning, of course, of the truncated holiday week here in the U.S. as well. So roared out of the gate on a Tuesday with VIX cash soaring up into the low teens. 14.06, I believe, was the high back on Tuesday. A lot of that driven, of course, by just the multiple whammies hitting the ecosystem at once. Of course, this seemingly never-ending parade of hurricanes that's firing off into the Atlantic and the Gulf. We have the ongoing threat that is North Korea, the continuing domestic turmoil, all of that conspiring to drive the VIX. And bit north couldn't really maintain those levels, kind of sold off throughout the rest of the week. And today, as we are recording the show, getting a little bit of juice again, as Mark alluded to, kind of this weird disassociation where pretty much the rest of the market is unched, and VIX ticking up almost 3/4 of a handle, right about 12 1/4 right now. So say goodbye to the 11 handles where we were flirting with for much of the week, getting back into threatening those low teens yet again. A lot of that perhaps due to something we alluded to on Option Block yesterday, but a lot of people worried that some very literal weekend risk could materialize this week. And of course, we have the obvious stuff, which is pretty much the endless chain of hurricanes aiming at the Gulf and the Atlantic regions. Then, of course, there's the unknowns of potentially more missile tests coming out of North Korea. So all that perhaps adding into some cooler heads out there deciding, you know what, maybe it's not a bad weekend to put some butts in your back pocket, and perhaps all of that conspiring to drive us north. But maybe we'll start with you, Mr. Meatball. You seem to be the most agitated on this. Are you not buying that? Are you not buying that people are perhaps have some reason to be concerned, and therefore, even though the index not really moving, they could be driving the stuff a little bit higher?
Yeah, I mean, I think what you're seeing is a lot of put sellers are out covering. You have a lot of people hedging in VIX. I mean, let's face it, we're 1% off the all-time high. VIX is still only 12. That's not expensive historically. It's not insanely expensive. It's kind of more a normal level, maybe the mode. And you have this situation where, you know, take a look at bonds. Bonds are screaming that there's something going on. Yeah, you know, we got a 3-month debt deal. Lottie freaking da. Bonds are screaming. Their rates are threatening to, the 10-year notes threatening to break 2% yield again. There is, you know, some weird structural thing going on with markets where they're unhappy. Maybe it's tax reform, maybe it's Gary Cohn, could be North Korea, you know, and of course all of these hurricanes. But there is just a ton of jitters, and, you know, I don't entirely blame them. In fact, I would say if you're not hedging right now, I would be contacting my broker and being like, hey, what are you doing to hedge this market? And if the answer is, nothing, I would be moving on to new broker. Now, two other things that kind of struck me, kind of tail two stocks. One, the NASDAQ is actually the one index that is off today, and that's related to iPhone production problems. So Apple, biggest company in the world, it's down over 1%. That is going to push the NDX lower. That's going to mess with the S&P. The fact that the S&P is flat while the NDX is down almost around 0.5%, I think that points towards some interestingness. And then let's talk, and I know, Russell, you can't comment on this, but let's take a look at CBOE stock, which is at an all-time high right now. Why? Because every time Donald Trump opens his mouth, 10,000 VIX futures trade and 100,000 VIX calls and 1,000 SPX puts all at the same time. There's like, the CBOE, the CME, the NYSE, they should start a huge political action committee to keep that man in office because of how much money he's making in exchanges. Most notably, CBOE, which has just been on a tear as, we kind of discussed this yesterday in the option block, as volumes are just exploding. On a slow day now in the VIX options is like a fast day a year ago right now. There's so much heavy activity in S&P 500 and VIX options and futures.
Yeah, it's been an active roll since you set it up. Before we toss to Mr. Rhodes, you're right. It has been a record time for VIX options and futures. In fact, the numbers just came out from the CBOE for August. August usually, and as Russell has said many times, as we have said many times on this show for years now, August usually the kind of time of year, for this show at least, when we're talking VIX and Vol, you kind of like to forget. Nothing really happens. Everyone's over in the south of France or in the Hamptons. No one's really trading. Markets are thin. Not much really happens. And, of course, this August kind of blew the doors off that. Multiple records coming out of the CBOE. I'll just list a few of them here. Let's see. August 10th, VIX options and futures, new single-day volume records with 2.5 million contracts and 942,000 contracts, respectively, for the options and the futures. VIX futures setting new all-time records for the month as well. Total monthly volume and monthly average daily volume records with 9.2 million contracts total for the month and 397, almost 400,000 contracts ADV, monthly ADV, respectively. New open interest record as well. We talked about this on the show a few weeks ago. 14.8 million contracts back on August 15th for VIX options. VIX futures also new open interest record. 673,000 contracts opened back on August 7th. So yeah, it's been just and I think if you compare to last year, VIX futures up like 74% from this time last year. Something crazy like that. And granted, you're comparing it from a low baseline where August is usually pretty quiet, so any little blip is going to look huge. But still, it's just crazy numbers at a time when VIX was pretty much anemic pretty much the whole month. So it's all kinds of crazy. That said, Mr. Rhodes, what do you have to say about these numbers, or what Mark was alluding to, kind of the disassociation there, or perhaps anything else that caught your eye this week?
Well, the numbers have been increasing all year, regardless of what Trump's been saying, because most of it seems to be activity that's geared toward lower volatility or shorting volatility. The RMC, which we'll talk about later in the hour, a big portion of what's going to be talked about at Risk Management over in London next week has to do with shorting volatility. In fact, it was almost like pulling teeth to find a couple of people that wanted to talk about long volatility strategies for the conference this year, which might be a nice contrary indicator. As of late, I think that increased vol, a few things going on in the world that seem to keep people on edge, and just the time of year that we're going into. September, October always worries traders. Quantitatively, it doesn't make a whole lot of sense, but it just is what it is. Everybody comes back from the summer vacation and starts to worry about the end of the year, especially locking in a 10% year, when a lot of people didn't have great expectations for the stock market this year. But what you've actually had for most of the year, you've had people strategically hedging themselves. So, Mark Sebastian was saying, if you call your broker up, and you should call your broker up and say, how do you think, or how are you hedging my portfolio right now? If they haven't said, I'm not doing it now, I'm already set up, then maybe you need to be looking for another broker, because smart money has been doing a really good job of being prepared for some sort of market drop and doing it cheaply.
Yeah, I mean, how could you not? I mean, we're 8 years into, or call it 10 years into a major Fed monetary policy that they're finally changing, and they've got this huge balance sheet that they're going to have to come off. That's going to have to come off at some point, and there's, Russell, you're the interest rate guy. Isn't there a pretty steep, heavy correlation between market sell-offs and the Fed raising rates?
Yeah.
I think,
yeah.
yes.
Yeah.
So why wouldn't there be some sort of strategic hedging? I'm not saying just go out and dumbly just constantly be long puts, but have some sort of strategy to, go out and get VIX futures, go out and sell S&P futures or buy puts if certain conditions are met that make you want to hedge, right? It's that simple. I've never understood this. Just let's go more to cash. Why go to cash when you can hedge? That would be my big question. And with all these great products that are now out there, it's like kind of a no-brainer.
How many advisors do you think these days and asset managers are saying, "Oh, I want to get into the VIX futures racket"? Do you think you mentioned that to them, and 98% of them run screaming out of the room?
Yeah, probably. But they can still use S&P puts. You can still use S&P futures. There's lots of ways. I mean, I get a call once a year. I get a call from a specific family member that has a lot of money, and I set up an S&P hedge. It's that simple. It's not that hard. I obviously I don't charge. I just tell them kind of, if this is what you're looking to protect, here's what you should do. It's not advice. It's just, well, whatever. They're not going to sue me anyway. But the point being. The point being that
don't say never, dude.
Well, if my dad sues me, then I've really, really screwed up my relationship. But anyway, the point being that there are very smart ways to hedge. Why wouldn't you with the way things are set up right now?
That's an argument we've had many times on our Advisors Options show as well, where, so many people out there managing money, the vast majority of AUM out there from advisors and asset managers just follows the market up and then follows it right back down, and they are over-reliant on their ability to hit that sell button at the right time and go to cash. And you're right, it's such a binary decision for so many of them out there. That's either you're all in or you're completely in cash. And there's so much in between there that they should be investigating. Again, this is not, that will save that for that other program. We won't get into that now, but you're right. There is a lot to be explored. There are other things popping off out there. The market ticking up a little bit from last week, at least from a skew index perspective. So read into that what you will. We discussed the skew index many times on the show. It's two moving parts. It's the call wing and the put wing. Skew index, just a number. So bear that in mind. But up about 5 points from last week, up to about 135 here. And of course, the futures getting a little bit disassociated out there. Today's moving the cash. Notwithstanding, coming in this morning, they were about 1.5 to the front month and about 2.5 handles or so to 2 months out versus the cash. So a little bit interesting, a little bit rich in there. VVIX also lurking a little bit higher as we're seeing. VIX is moving again. VVIX hovering right around 100, which is certainly off from the 75, which is kind of seems like the bottom of the recent range out there, but also it's not the 130, 140 range where VIX is screaming. So VIX is starting to move a bit. It's worthy of note. So something to keep an eye on out there, our old friend VVIX. Speaking of things to keep an eye on, our friend over there, whether he's in the corner office, whether he's at the home office or the corner bedroom, wherever he's coming from, he likes to keep an eye on all things VIX weekly options. So let's let him do it. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody. You guys know the drill. This is the portion of the show where Mr. Rhodes, the senior man about town over there at the CBOE Options Institute, holds court for about, let's say, 32 to 34 minutes on all things VIX weekly options. Mr. Rhodes, the clock is ticking. Have at it, sir.
Tick, tick, tick. I'm going to have to speak very slowly because there wasn't a whole lot going on in the weekly space. But there's a couple of interesting trades that might diverge into some good discussion. On Monday, there were no VIX weekly trades. We were close.
That's a record. A record.
Tuesday,
0.
On Tuesday. Yes, on Tuesday, and actually when I started writing my notes out, I had Monday at the top. I'm like, hold on a second. It seems like a long time ago. On Tuesday, there were a handful. It seems like the first trading day of the week is when we get more weekly trading than the other days, and I don't necessarily mean like more volume, but a lot more. There might just be some people that are strategically trading weeklies, and their entry day is Monday. They don't like doing things over the weekend.
That and I think Monday, the kind of beginning of the week and last day of the week are the 2 days that I really I've seen a lot of use of the VIX weeklies. You get if I set up a bull trade on a Friday because I'm worried about weekend risk. Guess what? I get pretty good VIX exposure. If I want, let's say I'm worried about something really bad happening this weekend, I get great VIX exposure buying the 14 calls that expire on hey, thank you, that expire on this Wednesday, and that's one of the nice things is with these weeklies. I think you're going to start seeing people use them for, I'm worried about what's going to happen tomorrow, and then you're right. The beginning of the week is also a great time to set up. Especially more incoming trades are great on the that Monday.
So yeah, and actually today, just to digress for a second, the only futures that are really moving in line with the spot index are the ones that expire next week, because they're only at about a 20 cent premium now, having gone out at more of like a 50 cent premium yesterday on the close. But on the trading side, let me see. Tuesday, somebody sold 100 of the September 13th, that's next week, 11 puts for 13 cents, and bought 100 of the September 10 puts for 3 cents. They took in a 10-cent credit. They're looking smart right now with the futures, the midpoint of the bid ask at 1270. Somebody also, and this was an interesting trade, and all I wrote down was they did this a lot because there were lots all over the day. But basically, somebody sold a bunch of the September 6th 12 puts for 18 cents, and they bought a bunch of the September 27th 12 strike puts for 38 cents. They paid 20 cents for this trade. The September 6th puts, those expired with no value. The VRO, which is the ticker for the VIX settlement, was 1202. What a perfect trade there. So now they've got some 12 strike puts with a 20 cent cost. Those futures, the September 27th futures, right now they're up around 1350. So they need to see a little bit of a drop for things to work out on the long side of that trade. Don't know if they added to, maybe they sold some September 13th puts against it. I didn't see any volume in the September 13th 12 strike puts. So probably just hanging on to those other ones right now. Looking at the September 27th expiration again, just a bull call spread. Somebody actually bought 200 of the September 27th, 22 calls, and sold a like number of the September 27th, 30 calls, took in or ended up paying 25 cents. And if we get a big old spike in volatility between now and the end of the month, they'll probably do fairly well with that. Wednesday, just one trade of interest, but a very similar trade that occurred Wednesday. Nothing on Thursday, but a similar trade that was occurring this morning. Somebody on Wednesday bought a ton. That's the amount that I wrote down here of the September 20th 22 calls for 20 cents. And at the same time, they sold the same number of October 4th, 17 calls for 85 cents. Kind of an unusual calendar spread there. And those September 20th options, those are the standard option contracts. And then today, a very similar trade, one different strike price. Somebody bought a ton of the September 20th 21 calls, paid 20 cents for those, and sold the October 11th 17 calls for 90 cents, taking in a credit of 70 cents. So a couple of credits there, maybe looking for a mid-September spike. I think those September 20th options, do those work out fairly well? Well, they expired just before the next Fed meeting. But two very similar trades. One other thing I forgot to backtrack on the rate thing that Mark Sebastian was talking about. Looking at the CME Fed tool, they've got the next potential rate hike at August of next year now, and that's only a 50-50 shot.
That's crazy. And just
I know.
That's crazy.
Being pushed almost, and that's as far out as the Fed tool goes.
Yeah, looking around today, Russell, people seem to think the VIX is going to be a little firmer for the next few days. There was a big lot of the September weekly 11.5 puts sold at 15 cents. I think I saw about almost 1,000 of those gone up today. We've seen the 11s go up as well, and I'm guessing we're going to start seeing the 12 start trading here shortly. Shorting these kind of out-of-the-money puts has been a pretty decent business on a weekly basis. There has got to be some strategy that needs to be built where all I do is unload on out-of-the-money puts and buy puts that have intrinsic value on some ratio and just make a killing. Because that's kind of been the pattern I've been seeing out of a lot of trading is people really like doing these kind of short the puts expiring this week and long either puts next week or long an in the money put further back, something along those lines. So there's been we're seeing the weeklies really start to pick up. It was a slow beginning, but I think now that one, markets have tightened up a little bit, and two, activity has picked up, there are a lot of people that see the value in not just trading the standard contract.
Speaking of the standard contract, let's get into this. By the way, if you're listening live, we did put out a little live poll. We were debating earlier in the show, why are people buying themselves some vol going into this weekend? So we put out a little quick live poll. We gave you 4 choices: hurricanes, North Korea, the vague Trump concerns, could be a tweet, could be whatever it is. It's not political, just you're worried about he might say something that drives something crazy, or other. Let your voices heard. We'll break it down, the results, in a little bit in the vol voicemail. But speaking of the big contracts market, it was a short week, a truncated week, but still a fairly active week. I think a lot of that just kind of understating what's been going on over here from a broad macro and from a geological perspective over the past week. The ADV out there still creeping up, flirting with 800K, which is getting up there, 796 right now. So VIX options continue to rocking and roll, even on short weeks. Monday, obviously, we were closed. So as Russell said, tied for the record with 0 contracts on Monday. Tuesday, nearly 1.2 million contracts going up on Tuesday. So a rock'em sock'em that was, of course, the day I mentioned, too, where VIX cash was spiking up. All sorts of crazy was going on in the marketplace. So not surprising that the VIX options would put up some good numbers. Then Wednesday, kind of taking a little bit of a breather. I say only with air quotes, 603,000 contracts going up that day. Thursday, yesterday, almost 900,000. So flirting in the spitting distance of 1 million again. And today, as we are about halfway, a little bit more than that through the session, about 425,000. So it doesn't seem like we're going to hit the ADV today, but it could be, you never know. Second half of the day could deliver quite a bit out there. And again, like we said, a lot of people are loading up for this weekend, so it is possible the more stuff could pile in. In terms of the hot VIX strikes, the hot VIX options action, number one with the bullet, big positions out there in VIX land this week. Number one still remains it's this kind of this ongoing arm wrestling sumo match, call it what you will, between the SEP 20s and the OCT 25s. Remember, for a while there, OCT 25s ruled the roost. Then the SEP 20s kind of wrestled them off, and now OCT 25 is kind of fighting its way back, personally because a lot of the SEP 20s have closed. So OCT 25 is number one with a bullet yet again, still north of that 600,000 level, 635,000. Yeah, 635,000 contracts open on one option on one strike. Listeners, that's just how much paper is going up in VIX land these days. That's more than the OI probably. You could pick 20 other names and add them all together, and they probably wouldn't equal 635,000 contracts. And that's just for one option, one strike, not even the puts, just the calls. Number two, the SEP 20s, 460,000 contracts open there, taking up the number 2 spot. Number three, these puts, this risk reversal continues to dominate the risk charts, or the VIX charts, I should say here. These VIX October 12 puts, 414,000 of those bad boys still open, followed by the OCT 15 calls, 276,000. So if you remember about a month ago, we saw that OCT 12 12.15. Risk reversal with the OC 25 call kicker. That's still pretty much 3 of the top 4 strikes are that one trade. So there you go. Still some big VIX whales calling the shots out here. Number 5, the SEP 18s. 285,000 contracts open. So we dropped off about 350,000 contracts from the number 1 spot now, just to number 5. Number 6, the SEP 21s. 268,000 of those bad boys open. Number 7. The SEP 23s, 265,000. Number 8, the SEP 17s. Nice SEP call strip here, 260,000 open there. Number 9, the SEP 19s, about 250,000 open there. And just a tick below that, right around 250,000 as well. Round out the top 10, the OC 20s, 249,889. To be precise. Total, still a lot of numbers outstanding. Total, 12.5 million contracts outstanding. Not quite that record that was set a few weeks ago, 14 and change, but still just a ton of paper out there. About 9.5 million on the calls and about 3 million on the puts. Mark, any other? I mean, there's a lot of stuff was going up this week, and we noticed some stuff last week as well. We'll get to that first, or later. But anything catching your eye this week in the big VIX options? Any prints catching your eye here?
Yeah, we saw the put versus call spread. We saw traders roll out of September and into October a bunch this week. Mostly the 1723 went up in September versus the OC, I think 1724 versus and then the puts traded at the 11 strike. So that was kind of the big trade. And then today, we've seen 2 guys banging computers. We've got a size-up buyer of the October 26 calls, tied to 1435, and a size-up seller of the October 21 calls, tied to 1430 at 70. So two different traders are banging computers against each other. I'll tell you who was happy was the market makers. They were like, I'll buy your calls and I will sell you your calls.
Yeah.
And I will spread that.
How often did that ever happen when you were standing on the floor? Never. Never.
These two literally traded within. So they were sitting on the offer from the one trader, and then when this other guy came in to buy, needless to say, the 26 buyer got filled, and so and then they just scooped up the 21 calls. So that was a nice thing for. Nice little day for the market makers on 2 trades. Also, not as much back spreads. We're not seeing a lot of back spreads, and that's partially because VVIX is so high. When VVIX gets high, you see more of the sell put versus call spread. When VVIX is extremely low, I'm talking below 80, that's when you see traders start to buy the back spread. Also seeing, lastly, there's some people out there floating, trying to buy the SEP 20, 25, 30 call fly over the weekend. So that's been the big stuff on the upside. and the downside, like you said earlier, there's been a lot of SEPOC 12 put buyers, and there's been the weekly versus monthly put spread buyers as well. Bunch of calendar spreads going up that way. That's been the bulk of the action that I've seen today. Although it's been very electronic as of late. I've not seen a lot of stuff, a lot of these go up in the pit itself, except for the aforementioned 2 October trades.
It's funny you mentioned, first off, that cage match in the VIX calls. That's got to be nice for the market makers to get a little gift like that. Very rarely does that happen that way, listeners. Usually you get one-sided paper and you're trying to figure out how to scramble to spread that out. But to get both sides so closely linked and so close together like that, nice little gift for those guys down there. Probably could use it down there. And let's see. Speaking of ratios, Mark, we talk a lot about how the short 1, long 2 had been lining up for a while. You're right, not so much lately. In fact, right after the show last week ended, a lot of people were hitting us up about this trade, including this fellow here, Chris Brecher. I hope I'm saying that right. A lot of people asking us about this effectively 2-by-1, so a reverse ratio than we normally see in VIX, that went up right towards the end of the day on Friday last week. A lot of people were speculating this was some sort of well-timed paper. What do we think about it? It was the Nove 2028 2-by-1, so buying 2 of the Nove 28 calls, working up for $1.05, doing that 48,000 times, then selling 2 of the Nove selling one, excuse me, of the Nov 28, so doing those 24,000 times for 50 cents, doing, you can say 55 cents there, but they did on a ratio, so a little bit different. And I first heard about this, people were hitting us up, I looked at this and I said, oh, well, there's tons of open interest on the Nov 20 is about 68,000, so it could be as unlikely as it seems. It could have been a roll, it would have been an odd choice to do that, but it seemed like it could have been, because you don't see that ratio 2-by-1 very often in VIX space. It's usually the other way. If we said 1-by-2, it makes a lot more sense. And so then we started digging this a little bit more, and actually, as of today, those contracts are still open. That spread's looking a little bit better. He's up about a nickel, maybe a dime. I don't think this is, there were a lot of people with conspiracy hats on saying, oh, this was someone who knew about North Korea and they were loading up. I don't think, if I knew about North Korea, I don't think I would put this on. I would put a lot of different things on. But did you notice that trade, Mark? And do you have your tinfoil hat on for that one as well? And just in general, I know you're probably like me. You're probably not a big fan of the 2-by-1 in VIX land because most times it doesn't make a heck of a lot of sense.
Right. I mean, it can. If you get a VIX spike and you get a super high VIX spike and VVIX explodes, 2-by-1s are awesome. But but under kind of normal circumstances, not as much. And yeah, like you said, I can think of about a curbillion trades I'd rather do if I knew North Korea was about to explode a hydrogen bomb. This is probably not a conspiracy trade. Probably just somebody that's setting up some hedges against a position. And you never know. One thing to think about is the way that's set up. That could be against some other derivative contract. That would make a lot of sense with how that trade is structured, that maybe somebody's got some sort of variance or some weird over-the-counter product that this hedges off.
Yeah, it has all the feels, to use a technical term, of that. You're right. But yeah, so it's a weird ratio, weird timing. But yeah, people started suggesting this to me, that this was some sort of conspiracy. I'm with you. I could think of a lot of other things. VIX, North Korea hydrogen bomb. VIX 2-by-1 does not immediately leap off the page to me. So yeah, interesting trade. The guy hasn't taken it off yet, listeners. So if you have been watching this one, it is still open. It's about a dime, maybe not, about a nickel to the good. Not really a huge pop. Like we were saying, you need a big pop in VIX land for this thing to really start making sense. He's at the 20 strike in November. So bear that in mind. So all you tinfoil hatters out there. But still, interesting stuff nonetheless. All right, we're coming up against, I'll make sure you guys get some time on the show too. So let's get into some of your questions and thoughts. It's time to open up the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys hit us up, and you do that en masse with lots of questions and thoughts and pearls of wisdom and insults for the meatball, all sorts of fun stuff. Actually, before we get to that really quickly, Mr. Rhodes has some thoughts on that Nov trade as well. Mr. Rhodes, when you saw that Nov 2-by-1, I'm sure people hit you up probably about this as well. Did you have the same feeling that this was informed paper? Did you have the same feeling that, man, if I knew a hydrogen bomb was in the offing in North Korea, VIX 2-by-1 Nov 2028, that's what I would put on. Is that what you thought?
No, absolutely not. That was not the trade I would do. That's the trade I would do if I thought that nuclear war was going to kick off in early November. Not over the weekend. I would have used. I would have used the September options. I might have even bought you. I don't want this soundbite taken out of context in the future, but I might have even bought UVXY if I had known that. Because just you want to use the shortest dated contract that's got some liquidity in it if you're pinpointing an event. And, we had the discussion about buying the nickel out of the money calls on different things last week. And one of my arguments against the VIX call was what happens if the event is in September and not in December. So I don't think that was somebody that has their own satellite that saw some movement in North Korea.
Yeah, that was the Robert Redford CIA analyst in The Spy Game who takes his retirement money, I believe, in the end of that movie, and I forgot what he invested it in. This time he chose the VIX 2x1, and unfortunately, he didn't choose wrong because the trade's actually up. Good luck if you unwind it. We'll see how much of that stays in. But still, not exactly. Long story short, not perhaps the tinfoil hat conspiracy drama that a lot of you thought it might have been at first blush. Let's pay off some of the other questions we had out here. Last week we asked you guys, hey, a lot of you guys wanted to chime in on this one. We said, hey, if you had a lottery ticket to buy in terms of a VIX call for a nickel in any of these names, which one would you pick? It could be Amazon, Apple, Tesla, or ye old VIX. And yes, we did the math for you. It works out to VIX right about the D70 strike, Apple, the D's 235 strike, Amazon, somewhere a little bit north of D's 1420. Unfortunately, that's as high as they go in D, so let's just pretend it's 1420. And Tesla, D610. So which of those would you pick? And 40% of you, overwhelmingly the largest chunk, saying VIX. Almost a quarter saying Amazon, 20% saying Apple, 16%, only 16% saying Tesla. And a lot of people still chiming in this one, like Grant NYC this morning, saying VIX, of course. So people still, even though the poll's over, people are still sending in their responses. We appreciate your enthusiasms for the lottery ticket. This week we asked you guys, Q4 is looming. Where are you placing your bullish volatility bet? So a similar theme for the end of the year we're looking at now. Which of these segments has the most volatility upside by the end of 2017? We gave you 4 choices. We said gold, crude oil, again, vol, this is volatility we're talking, S&P vol, aka the VIX, something you may be familiar with, and single name stocks like your Amazons, your Teslas, that sort of thing. So that's what we got floating out there right now. Let's see, I got the numbers here in front of me. Mr. Rhodes, we'll start with you. I got a feeling I know where you're putting your money, but where are you putting your money? And then more importantly, where do you think our audience is putting their money? This is the portion of the show where you unmute Mr. Rhodes. Oh, Mr. Rhodes, the Skype gods.
Did we lose him?
The Skype gods, not okay. We'll start with you then, Mr. Meatball. while I go back and dig up the Skype gods for Mr. Rhodes. What are you feeling here on this poll, sir?
Well, believe it or not, I mean, S&P and single name is kind of 6 of one, half dozen of the other. I might say kind of your FANG names are where there's going to be the most volatility. I might look at like VXN, but you also, I think the oil vol has already happened. That was months ago. And gold, vol's starting to move. Gold is starting to move. But, gold has failed in every single respect to show itself a risk asset, a risk-off asset. It just stinks. Although this year it is outperforming the S&P right now. Last I checked. So there's I'm going to go with the VIX / single name because I think that's kind of the same thing. I do think that we've got some serious risk of kind of your top 10, your hedge fund hotels eating it if we get any kind of real structural sell-off in the S&P 500. And actually, the one that we left off that probably is most likely to be volatile in this poll, I'm gonna give you this one. You ready? TY-VIX. TY-VIX, I think, is where we could see some real volatility. That's where there's risk in interest rates.
I thought you were going to say something crazy like Bitcoin, which would have been a good call as well. A lot of vol out there.
That would have, yeah.
That probably would have got a lot of results.
If we break 2% on the 10-year, maybe that does get some freak-out option trading going and get TY-VIX moving more.
TY-VIX, if you're wondering, listeners right now, hovering right around 4.6 or so out there. It's been kind of range bound. Had a few spikes, had some big moments back on the 9th and such, but otherwise pretty much been hovering in this 4.5 range or so for the last few months. Mr. Rhodes, the Skype gods are smiling upon you once again. Did you hear our poll question, and what are your thoughts? Where are you falling, and where is our audience falling?
My thought was VIX, but I love the girl that I've been with for so long that I just can't walk away. I could see some real world craziness causing gold volatility to go a little nuts. But the other thing is, every time VIX is Mark said that gold has failed us as a risk asset. Well, if you think about it, VIX has whenever we've gone to a risk-on situation, VIX's move has been very short-lived.
Yeah, not surprisingly, a lot of our audience is in the VIX camp, and that's kind of what they're voting for yet again. About the closer this time, though, about a third saying VIX, aka S&P 500 volatility, 28% going for the gold vol, so a decent crowd of the gold vol buyers out there. Gold vol has been an interesting product. It's kind of, the skew has been very volatile. The gold itself, not so much. It's had some moments, but it's kind of been interesting to watch. 21%. Going for crude vol, we'll talk about more if you like gold and crude vol. Talking about that more in about less than an hour here on TWIFO. We've gotten into that quite a bit. It's taken quite a bit this year to really sustain any sort of crude vol to the upside. We've seen brief blips, but it always comes right back down. So to generate some sustained crude vol, you're really going to have to see some aggressive move, probably to the downside. Is really what's going to drive up that vol. Other than that, it's probably going to be fleeting. But that said, 21% of you saying crude vol, and 18% bringing up the single names, Amazons, whatnots. We were going to put the FANG stocks in, and then we thought, let's not be specific. You can pick your name of choice if you want some crazy biotech. Have at it. We got about that's about a day or so left. And speaking of which, we put a quick poll in. It's only got a couple hours on this one, so if you're listening after the fact, afraid you're out of luck. But we asked you guys, hey, why are you guys buying vol this weekend? What's going on? We gave you choices of hurricanes, North Korea, Trump concerns, or other. And so far, it was tied till a moment ago, and now it just moved. It was 47-47, hurricanes in North Korea. Now North Korea taking the lead, 47%. Hurricanes dropping down to 42%, and other, 11%. I'll have to see what they're specifying for their others, coming in at 11%. So no votes for Trump concerns there, which could cover a wide spectrum of things. Again, not political, just in terms of, hey, his tweets are going to drive something, or he might say something that causes some market movement. So bear that in mind. All right. Let's see. Got a bunch of other questions here. Let's see. Let's go to... this is one. We didn't talk about this last week. A lot of people hit us up on this one, including... Elbu, I guess that's how you pronounce that. He says, seems like everyone is jumping on the short VIX bandwagon these days. We need to get Bill Valentine back. He's all over this short VIX. Is it crowded? Is it not crowded? Elbu goes on to write, since when does the New York Times cover volatility trading? And he links to this story that ran, I think, a couple of weeks ago called Day Trading in Wall Street's Complex Fair Gauge. This was in the Times. A lot of you guys probably saw it, and a lot of you guys sent us links to what we thought about that. Profiles this guy who used to be a Target logistics guy, I think, and now he's been in this short vol thing, and it profiles how much money he's making. I always tend to discount these ones that talk about how much money people make, because anyone who's been in this business for a long time knows the people who are most willing to share that stuff are complete liars. I'm not calling this guy a liar, but I've been around the block long enough to know when you're out there sharing how much money you made, just a rule of thumb, cut it in half, cut it by 2/3, and you're probably somewhere in the ballpark, maybe by a tenth. Cut it down to a tenth, and you're kind of happy. So that's why we never do that on this network, by the way. We don't come people on and have them tout their returns and things like that, because most of that's unverifiable and a lot of it's nonsense. But that said, it's kind of this kind of just is emblematic of what we've been talking about for a while. I know I'll change my terminology to avoid offending Bill. It's not crowded, but it is a very popular trade, this short VIX, and literally your grandmother, literally the former Target manager is now out there loading up on short VIX. I'm sure you guys both saw this article. I'm sure people probably hitting you up on this one as well. What are your thoughts? And also, it's kind of interesting, even the Times. Time is not known to be a bastion, our listener is right, not known to be a bastion of options content. I think I can probably count the number of big options articles they've done in recent years, probably on one hand. So interesting to see them writing about this. And if it's reached that level, is it fair to say maybe this trade has hit saturation point, Mr. Rhodes?
No. You saw the VIX pit absorb an awful lot of liquidity, or offer up an awful lot of liquidity when we traded over 900,000 contracts earlier in August. I think a crowded trade is one that, when it's not working, you see a lot of people completely get out of the way, and people get burned by having to. And usually it's covering your short, because you can lose more on short than long. And we just did not see that. Everybody trying to shove through the exit and push VIX up to incredible levels when we've had the small volatility events that we've had. When it overshoots to the upside on the same sort of news that we've been dealing with, that's when I'll acknowledge it's a crowded trade. Now, the problem is I'm not going to acknowledge it's a crowded trade until after it has proven to be one, which is too late.
Yeah, when I meant saturation, I didn't mean, can the VIX pit handle more? Obviously, they can handle more. I meant more along the lines of, has it reached maybe saturation in the public consciousness and mind share? Is literally everyone and your mother and your grandmother now out there shorting VIX? Mr. Meatball, you said this before. Are you starting to get on this tip now where literally is your grandma coming to you saying, hey, I want to short some VIX futures?
Well, I found it strange that the underdog's alternative hidden personality is now trading VIX futures. The shoe shine boy is trading VIX futures. No, I think that when the New York Times is writing about stuff, that it's an uneducated person probably talking to the wrong person about what's actually happening. I don't like hearing everybody and their mother just going out in short vol. It's not something we don't encourage at Option Pit. We do. We are in short vol trades like that all the time. However, you can do these and set up a hedge and, be in a position where you're not racing if vol explodes, and also you are making money on a kind of a daily basis as vol kind of peters lower. There's the contango trade is a trade, and with the volume just exploding every day in VIX futures, you're going to need a lot of mom and pops in there for this thing to ever get to be a truly quote unquote crowded trade. When the way you tell a crowded trade, the people always argue, they're like, well, there's always with futures, there's always a long and a short. So how could a trade be crowded? Here's how a trade becomes crowded. When there's a whole lot of people on one side and there's 3 or 4 market makers on the other. That is when a trade becomes crowded. And I'm not sure we're there right now.
Kind of the polar opposite of what we saw this afternoon with that VIX kind of grudge match going on. Everyone buying and selling, that makes things happy. Kind of the polar opposite of that would be the crowded trade mechanism. We got time, let's see, for one more here. This comes from Ellie. Ellie wants to know, what kind of follows up on our multiple VXX conversations we've had recently. What's the ideal month strike combo when buying puts on VXX? She puts here in parentheses 6 months and 25% out of the money. So she wants the secret sauce. This is interesting. This is kind of subjective. I think everyone kind of has their own flavor of how they'd like to do this. I've often said, I come down to it. I think 25% is all right, but I go a year or kind of a little bit. I like to lean a little bit longer. I think if I remember correctly, Mr. Meatball, I think you and I have maybe disagreed on this before. I think in the past, you've come out more kind of like Ellie here, like 6 months in that time. Isn't that where you like to buy your puts, or am I completely misremembering that?
You are misremembering.
Okay. Well, I attribute, maybe it was the rock lobster then.
Yeah, no, if and when I'm setting up puts, they're either very near dated or very long dated. That's kind of the way I set these things up. I'm either hedging against something I see right in front of me, or hedging over kind of a long period of time. So I think you and I are actually in the same boat. You are maybe thinking of my one-eyed friend.
Yes, maybe. I've seen remember disagreeing about this with someone. I thought it was you. Maybe it was the rock lobster. But yeah, you got to go. I think you got to go at least a year or more to really get the true effect. Right now, VXX hovering right around 49 or so, 48 and some change. So yeah, 10% out. Or to me, he wants 25%, or she. So you're talking down to around, talking down into the mid to low 30 handles there. So you needed some time to make that kind of. It's not just a given that this erosion will happen, but obviously it's driven by a lot of factors like the contango, everything else that we've broken down a million times. Won't get into that more on the show. Go check out some of our past episodes where we've debated at length what caused the VXX erosion, and you could have at it till your heart's content. But you need some time to take effect. I don't think 6 months. In this case, it would be enough. I don't know, maybe it was you, Mr. Rhodes, I debated this with. Are you more short-term, 6 month horizon, or are you on the same camp as me and the greasy one? You got to go out at least a year.
I want to go out at least 6 months, closer to a year would probably be good. It also depends on the environment you're doing it in. If you're doing it in response to a spike, I might want to be in the money with these things, actually, which I think differs from you guys. I'm willing to be a little bit less, have a little bit more time value involved in one if I'm doing it when we're seeing a VXX spike, as opposed to just putting on one of these shorts to benefit from a continuation of what is a slow grind lower.
There you go. Hope that answers your question. So it seems like none of us are in that time frame. We got to go a little bit farther out. If you want to go 6 months, you probably got to taper down your out of the money expectations or pay up a little more. But that said, good questions. We got to keep rolling those. Time for our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, a.k.a. the embarrassment block. Once again, the VIX has proven to be a slippery rascal out there. A lot of it coming today. We were all not closer to the ballpark until this last movement coming in today. VIX cash up nearly a full handle now, right around 12.5 to finish out the show here. So none of us were that optimistic. All of us were kind of feeling kind of where it was or a little bit south of where it was earlier this week. We had Russell kind of the highest again at 11.11. Mr. Meatball was taking up the 10.65 level. He was kind of Goldilocks in the middle. Excuse me. I was filling in the bottom there, 10.15. We were flirting with those 11 handles for a while this week, as you know, listeners. And then today's weekend risk conspiring to bring us north. So no real winners, but Mr. Rhodes was closest, so I'll let him go. Mr. Rhodes, do you want to go first, or do you want to pick someone to go first?
I want Mark Sebastian to go first.
Well, there you go. Mr. Meatball, what say you, sir?
I'll tell you what I'm going to say to you. I think that next week, with the vol getting bid up this much ahead of the potential North Korea bomb over the weekend, I think we're looking at a vol plummet. And I think you could see some near-term risk off, or risk on, back on. And maybe we make a run at 24.90 next week. So I'm going to come in and I'm going to say 11.01.
All right, 11.01. Mr. Meatball, Mr. Rhodes, let you go next, or you want me to go next? I'll let you choose.
Really? That low?
Uh-oh.
That low, 11.01.
I'm going to stick with 12.25. I think the low. How many times have I said this? I think the lows for VIX are in for the year.
No, if you keep saying it, it has to come true eventually. If it has to come true eventually, right? You keep saying it.
I could be 6 feet under, and you guys could just play a recording of what I say for the crystal ball over and over again, and maybe change the numbers a little bit.
We sometimes have had to do that with your various ghosts popping up on the show. They tend to all be aggressive vol buyers, usually. Sometimes crazy vol sellers. You never know. That's what I hate about going last, because you two guys have now. I was firmly in the right around 11.5 camp, which is pretty much about a point lower than where we are. Now I'm kind of in the middle of you two guys. So c'est la vie. That's what I get for having to go last. But yeah, I'm not feeling these levels next week, but I think we'll get some, obviously some over the weekend spike, maybe a little bit of stuff, depending how these just endless series of hurricanes plays out, let alone, of course, what's expected. If we don't get a test this weekend, then I think we'll see the stuff come off even more aggressively. I think there's enough to keep the juice in there. I don't think we're going to flirt with single digits again, so at least not for the time being. So I think 11.5 is a fairly safe level to be, but you never know. As we said, VIX has proven not to be safe in the past, and it could prove to do so yet again. All right, listeners, that music unfortunately means we've come to the end of another epic easy for me to say at the end of the show, epic volatility journey. What a journey it has been. We talked weird VIX ratios. Was it in form paper? Was it not? Spoiler, we don't think so. We talked about record numbers out there in VIX options and futures for August. Weird action in the cash. Weird action across the board, including in the weeklies. All sorts of fun stuff. Talked about a lot of your questions, our polls, lots of good stuff. But before we go, one last time around the horn, let's start with you, Mr. Rhodes. Got some big stuff coming up in CBOE land very soon. Why don't you fill us in on it, sir? Mr. Rhodes, this would be you, sir. Uh-oh, are the Skype guys not smiling upon him again? All right, I'll do his plug for him. Listeners, if you are, a lot of you are out there in the European region. If you are listening to this and you're in Europe, I'm guessing you're into vol, then head on over to the CBOE's risk management. It is right outside of London. It is coming up, I believe, next week. Search for CBOE RMC. You will find it for yourself as I pull it up for myself here to get the exact dates. It is September 11th through 13th. So yes, coming up next week, it's going to be in the Grove Hotel in Hertfordshire in the UK. So right outside of London there. So if you're in the area, check it out. This is where we get a lot. We've done live shows from RMC in the past, not from Europe, but in the US, and there's a lot of great content. Russell already alluded to, there's going to be a lot of talking about some short VIX trades. Is it crowded? Is it not? As well as, of course, harvesting ye old risk premium, always a favorite there. Check it out. If you are so inclined, surf on over to CBOERMC.com to learn more. And Mr. Meatball, I know you got something cooking over there in the land of the pit. What is it, sir, and how can we get a piece of it?
All right, Mark, speaking of the upcoming RMC, I got a joke for you. You ready?
I'm always ready for a joke. Who is there?
Europe.
You're a poo.
I'm not a poo, you're a poo.
There we go. Spoken like a man who has young children. I like it.
Exactly. Anyway, we've got a big event coming up at the end of the month. Me, Russell, you, we're going to be all talking about VIX and volatility and trading. We're going to do a live option block. I think might as well do a live, might end up doing a live vol views as well. And you're going to get all sorts of opportunity to mingle with us. We're going to have drinks. It's going to be a awesome educational event. The link will be in the show notes.
The link will be there, and surf on over to optionpit.com to learn more. And if you're listening to us live, stay tuned. If you like all these things we're talking about, gold vol and crude vol, we'll get into that a lot more in about half an hour there on TWIFO. And otherwise, we'll see you next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.